Hello. Today I'm going to talk about how does a small company go public? When a small company wants to begin selling stock, it represents a major event in the company's timeline. An initial public offering, or IPO, allows investors to buy stock with hopes that the company will grow, and with it the stock price will rise. The process of going public is complicated, and for a small business it requires expert help. Deciding on an IPO. Before a small company decides to go public, its leadership must make sure it's the right time for an IPO. Going public is one way to raise a large amount of capital because it equates to selling off a large portion of the company to a large number of owners. But an IPO is a one-time event, and selling stock before there's a ready market for it can be a costly mistake. Financial advisors can help a small company's board of directors get organized and decide when it's best to pursue an IPO. Preparation. The first step in going public is to prepare the financial documents that underwriters and investors will use to make a decision about buying shares. The key document here is a complete corporate business plan that lists all of the company's debt obligations and plans for success in the future. Other documents include quarterly financial reports that cover the last several years and a corporate profile that briefly describes the company's background and vision. Underwriting. Once a company is firm in its decision to offer an IPO, its board of directors must select an underwriter. The underwriter is a financial institution, usually an investment bank, then performs an analysis of the business's credit and handles the financial details of the IPO. Venture capitalists who have a stake in the company from earlier investments may help in selecting an underwriter. The underwriter is involved in setting the stock price for the IPO and lining up the first round of buyers. Means of selling. Once the IPO is ready, the underwriter and management will need to decide where to sell the stock. Most major stock exchanges are only open to companies with values above a certain level, making it impossible for small companies to sell on one of the famous stock exchanges. Smaller stock exchanges are an option, as is selling stock directly to investors. In any case, the business must file with the Securities and Exchange Commission prior to its IPO and receive approval to sell shares. Once approved, the underwriters can sell the first shares and let the open market do the rest. Thanks for watching.